Have you found yourself questioning how the big players always seem to anticipate the market's next move? Well, they call it smart money concepts, and today I'm going to be breaking down these powerful strategies and tactics with no complicated terms, just simple steps to help you understand how the market moves and how you can follow along. Let's try to aim for 50 likes on this video, and your support means the world to me and it helps the channel grow, as I'm trying to put out the best free educational content on this platform. Let's go ahead and get straight into the video. You have got to love the notes. If you do not have notes, you are not going to succeed in trading. And that brings us into welcome to Smart Money Made Easy, where we take the complex world of institutional trading and turn it into practical, easy to follow strategies and concepts. I'm going to try to walk you through smart money concepts, revealing how the biggest players in the market operate and how you can align your trades within theirs. Maybe you will be wondering to yourself, why does my trades keep hitting stop loss when they look like they should, deliver from an order block, deliver from a fair value gap? You need to stick with me and you'll learn how to spot key levels, understand price movement, and make these powerful strategies work for you, making trading feel like easy money. And that's exactly why I call them easy money concepts. Make sure to watch the entire video so you don't miss out on any steps and avoid confusion. Be sure to like the video as well and subscribe for more straightforward trading insight. Also, check the description for a link to a free trading community to further improve your trading skills. And if you're a part of the community as well and you're subscribed, be sure to like the video and keep the good energy going. Be sure to comment below as well. Let me know what your biggest trading struggle is. I'd love to hear your thoughts and how you can improve. Let's get straight into it. As you guys can obviously see, we have the PDA matrix with our previous highs in a premium and our previous lows in a discount. You have all the noise in between, and a perfect way to start is identifying high probability zones and trading above old key highs and below old key lows efficiently. Instead of complicating your strategy with too many concepts like mitigation blocks, focus on zones where liquidity is likely to be engineered above old key highs and below old key lows. These areas are typically where liquidity pools reside and become critical points of interest where smart money players, institutional and big traders often initiate moves. And here's how you can leverage this. Honing in on key highs and lows, you want to focus on areas around old key highs and lows and look for patterns or price signatures where price action breaks above or below these points, typically in alignment with the higher time frame narrative, and this allows you to identify potential false breakouts, turtle soup setups, where smart money traps retail traders. To avoid overcomplication, exclude mitigation blocks from your analysis and prioritize order blocks, fair value gaps, and obvious liquidity voids. This helps you reduce decision fatigue and analysis paralysis, aligning with your approach of keeping trading straightforward and focused on high probability setups. We are going to be leveraging the power of time and aligning within the market phases. This time-based approach you've incorporated into your trading is crucial in executing trades around old highs and lows. For our accumulation, manipulation, to distribution, power of 3, it understands the daily structure through the power of 3 model, recognizing typical phases such as an accumulation during the Asian session, a manipulation during the London, and a distribution during the New York session. This time-based cycle helps you avoid getting caught on the wrong side of the trade. For example, you might look for price to trade above an old key high during the London manipulation, setting it up for a potential reversal during the New York session into a New York continuation. For specific time frame for entries, your preferred trading times are 8:30, 9:30 into 10 a.m. to provide clarity on when liquidity sweeps above old highs and old key lows are likely to occur. Combining this with the top-down approach, aligning your weekly into your hour 4 and your hour 4 into your 15-minute, as well as your hour 1 into your 15 and 5-minute, you can increase the precision of your entries. Using the MMXM framework, you can use the market maker buy or sell models to anticipate and confirm the reversals at these levels, validating the setup with an SMT divergence or other forms of confirmation such as an order block or a fair value gap after the order block is created to help you avoid false signals and only engage when multiple criterias align. With smart money concepts using and targeting liquidity and understanding the smart money divergence, we have to understand the draw on liquidity. Your strategy revolves around understanding where the draw on liquidity is and leveraging the narrative that price will likely move towards those liquidity zones. For example, if price trades below an old low and creates a bullish structure under the old low, you can anticipate a move higher, targeting the nearest liquidity pool above an old high, simply sometimes visualized as an internal to external move, or an external back to internal move. For the smart money divergence, we combined with an SMT with your focus on trading above old highs and below old lows. Look for divergences between correlated pairs or indices where price sweeps those levels, and this confirms that smart money is accumulating positions against those retail sediments. Against the retail sediment. For risk management and entry tactics, we use safe stops using CSIDs and order blocks. Use the change in state of delivery and the order blocks as a safe entry point to position stops above or below the order block. For instance, if entering on a break of an old high, a stop loss would be placed strategically under the swing low or a defined invalidation level within the order block's structure. For size and precision and adjusting stop loss sizes to manage risk better and building confidence over time, consider using these stops dynamically depending on volatility and the significance of the liquidity level being targeted. Sometimes people based on confidence like to use more size, and some people don't. They like to stick to one amount and continue trading that amount. Do what you like and do what feels the best. For simplifying the approach and key takeaways, and to summarize, trading above old key highs and below old key lows can be simplified as yet an effective approach where you combine these principles. You focus on where liquidity is being engineered, and you prioritize trading at liquidity points where manipulation is likely, aligning with the higher time frame bias. You use time-based patterns and price signatures to align your entries with the known market phases of the power of 3 and our known manipulation times. You confirm with an SMT and an order block using the SMT divergence as a confluence on top of the order block, the structure, and the narration of the higher time frame and respecting right order flow. Redefining risk management, you can adjust your stops loss based on volatility and clear invalidation levels to protect against sudden reversals. And by integrating these components, you can maintain a focused and disciplined approach by avoiding pitfalls, over-analyzing, while still capturing high probability trades within inside of the market. Continuing on, and to further enhance the effectiveness of turtle soup around old key highs and lows, integrating the turtle soup sequence in correlation with the premium discount array matrix can add a robust layer of precision and confirmation to your trading setups. This combination allows for a more structured approach to understanding where price is likely to reverse or continue, based on where liquidity is drawn and how it interacts with key areas inside of the PDA matrix. It is key to understanding the turtle soup sequence in relation to key highs and lows. The turtle soup sequence setup focuses on exploiting false breakouts of old high or lows, typically targeting areas where retail traders would have their stop losses. This setup is powerful in capturing swift reversals where liquidity is swept and smart money takes the opposite direction. Above old highs and below old lows is when price breaks above an old key high or below an old key low, and the turtle soup setup comes into play. It capitalizes on the liquidity swept where price manipulates retail traders into taking positions, then only to reverse sharply. This aligns with the concept of liquidity engineering, where smart money hunts for stops above or below these levels, and using the PDA matrix to identify smart money reversal points. We use the PDA matrix to help categorize different price delivery arrays in zones of premium and discount relative to the equilibrium of the entire range. Combining the turtle soup sequence with the PDA matrix offers a refined approach into identifying precise reversal points. In our premium and discount zones, after price takes out an old high, it may enter into a premium zone on the PDA matrix. Conversely, after taking out an old low, it may enter into a discount zone. The PDA matrix outlines potential reversal points or areas where price may face resistance, such as rejection blocks, order blocks, fair value gaps, or liquidity void. Understanding where these elements lie relative to old high or lows can provide additional context for your turtle soup entry. Suppose price takes out an old high, sweeps liquidity, and enters a premium zone with a visible fair value gap and/or with a bearish rejection block. In this case, the turtle soup sequence can be validated within and because of these PD arrays, signaling a high probability short entry. Similarly, after we sweep below an old low into a discount low, we look for bullish rejection blocks, reacting from positive order blocks, or other PD arrays to support a long entry. Now we can put all the pieces of the puzzle together, with the correlation of the turtle soup and the PDA matrix for higher accuracy, and it providing a dual layer of confirmation. With the liquidity sweep confirmation, when liquidity sweeps occur above an old high or below an old low, the PDA matrix can help determine if this move is likely to be a continuation above the high or below the low, or to reverse from above the high or reverse from below the low. If price takes out a high and is at a premium PD array, such as a bearish order block, it suggests the likelihood of a reversal. Here, the turtle soup sequence would enter on the confirmation of the reversal. In avoiding false setups, not every break of an old high or low will result in a successful turtle soup trade. The PDA matrix can help filter out false setups by showing where price is likely to encounter a significant support or resistance. For example, if the price is in a balanced range after sweeping a high but is yet to encounter a significant PD array, the reversal signal might not be strong enough, and you might not you shouldn't take it if you aren't confident in it and you don't have your overlapping signals. For practical applications, we can almost go step by step and identify old key highs and lows and look for areas where price is likely to sweep liquidity. We can wait for a sweep and a rejection, allowing price to break above an old high or below an old low to take out the liquidity, and then consult to the PDA matrix. After the sweep, check if price aligns with a key PD array, such as a rejection block, an order block, a higher time. Obviously, all of these should be higher time frame, like a higher time frame rejection block, higher time frame order block, a higher time frame FEG, or a higher time frame liquidity void, which is usually seen as an FEG, but like we're talking about, it could be an old high, and continuing on. Confirm with your turtle soup setup. If the conditions align, use the turtle soup entry to capture the reversal with a tight risk management. In managing the trade, utilize our safe stops and adjust accordingly to the volatility around the PD array zone. For example, if price takes out previous day high and sweeps above into a premium zone and encounters and forms a negative rejection block, reacting from a bullish order block, sending us a bearish order block, sending us lower, as well as having an unfilled FEG, this can be a high probability short setup. The turtle soup sequence would enter on the confirmed reversal candle or other confirmation signs, such as our breaker in the opposite direction with the fair value gap, or however you like to look for your setup, and then targeting the opposing end of the range, with stops above or below the manipulation high or the relevant order block. Coming in and understanding our key takeaways, we should have a layered confirmation. The combination of the turtle soup and the PDA matrix allows traders to add more context and confirmation to their setups, increasing the probability of said setup. You're able to reduce your risk by allowing time and reducing if it's a false breakout by filtering setups through the PDU array matrix, time with the power of 3 and market maker models. You avoid entering on false breakout signals and focus only on areas where price is likely to respect a significant PDU array. This also enhances your precision in trade execution because you can align the turtle soup setup within the PDU array matrix and redefine these entries, allowing for a tighter stop loss and better defined risk management, as well as being able to hold your trades longer. This approach leverages both the simplicity of the turtle soup setup and the sophistication of the PDU array matrix, creating a powerful synergy for trading above old key highs and below old key lows while capitalizing on smart money movements. And if you've made it to the end of the notes, I'll give you a cookie or something, right? If you've made it to the end notes, leave a comment letting me know that you watched all the notes, and we're going to get into a trade that I took on NFP Friday that aligns and stacks every single one of the things that I said in this video and will almost blow your mind on how simple, easy, and straightforward it can be. So first things first, we hop on our weekly chart and we see that we're responding from this weekly FEG, and then I also note that we're responding from this weekly FEG to the bearish downside, as well as failing and rejecting an SMT all-time highs. So keep that in the back of your head. That's while we come into the chart on the 4-hour and see that we've reaccumulated above an old set high, manipulated, and now I'm anticipating a distribution within this Friday, honestly past this Tuesday high, expecting maybe a reversal, but we do run into our order block. So what I want to focus on here is that we have a daily order block, and it's pulled up a little bit here. I'm just trying to make everything clean so you can be able to read it. So we do tap into it. So we'll take that off the chart now. We can see where we're delivering from. And we have our long wick that we come into 50% of and reject and fail and reject the low and fail to close through the wick. We were talking about here with the Discord group how I wanted to see this wick filled to and through, right? And then into taking out this low resistance and then see how we react past the key low. That's one of the biggest things is you can't always be confident once you take out this low that we're going to keep continuing to take out the low resistance, the low hanging fruit, and see how we react into our daily order block, balance price range, and then continue to reject higher. We see we break the high, and if we're bearish, it would make sense continuing to deliver, right, with our wick on the opposing direction, using our previous up close candle to support price lower with the displacement into the FEG. It would make sense to continue lower from internal to external. So we didn't. Also here, forming the SMT at this low, rejecting the low and failing to close below, continuing in to closing above this 4-hour order block and also inside of the rejection block wick area as well. We see us break the high, come into an OT of the range, and then deliver higher. We break the high once again, break lower, SMT, and then continue to deliver higher. So we are seeing that we're respecting bullish price action into Thursday, into Friday. So where do I long and where do I look to be able to look for a turtle soup entry? I ended up longing one at the NFP open here, which is cool. That's fine, but that's not, the best trade to be able to show that. So I stayed, waited patiently for another trade, and we noticed after the 10 a.m. open, you can almost see it as a double Judas swing, right? Where you have your 8:30 open, move higher, into your 9:30 Judas lower, into expecting us to run higher, which we see it just took till the PM session to deliver, and then as well as running back into our 15-minute order block here as well. I ended up getting stopped on this one because I entered within inside of these candles, and I honestly anticipated us to be able to move higher without needing to move lower. It played out, but it just ended up taking all day, so as I would have wanted it to take an hour or maybe two, and we see coming into 11:30 and 11:45, right, we redeliver higher, take out the high, use our down close to support price higher, and then keep respecting bullish price action. That comes in to what we see each session do, so following the PD array matrix into continuing and following a reversal or continuation. We see the SMT would be the delivery or the beginning of our smart money reversal into this one as well. So we can see this is a first leg accumulation into a second leg reaccumulation while rejecting and respecting order flow. We see 15-minute order block created, breaker with an FEG created, make it a little bit cleaner, just bring it down there. It's respected and then delivered higher. And then order block created as well, respected and delivered higher. We see we leave an FEG as well, FEG, into displacement above, into a reaccumulation above our old highs. Then the London session accumulates, creating its own internal liquidity with equal lows into the Asian sessions generated FEG and order block here. As well on the hourly, we see the order block close into respecting during the 3 a.m. open into an anticipated manipulation time. We see we respect the order block again, and even if you entered in here inside the FEG, right, your stop's below the low, it just chops around a little bit and then redelivers. Following into my 8:30 long, where we used, once again, displaced away, reaccumulated, used our previous down close candle support price higher, internal to external, balancing the price range into the order block, respecting and then delivering higher. And then it was right around here where I got inside the trade and then held until I think it was around EQ of the 4-hour gap, or it wasn't all the way to the order block, but it was around there. But that's not the main trade that I'm focusing on, right? We're following the PD array matrix into order flow and then being mitigated by the hourly order block and 4-hour order block in here, as well as noticing the higher time frame buy model, as well as, right, not really sleeping on the sell model and reacting from the weekly objective up here. So we have a weekly FEG down here that we reacted from and a weekly FEG up here. So always keep that in mind, and then see how we've delivered from the order block, and then as well as how we've left a really long wick on the 4-hour. It's one thing I didn't like, but we did close above with the 4-hour CSID here. Take this off, take all the other lines off, and right, we see we closed with our 4-hour CSID here into an hourly, right? Not super clean, but there's small FEGs there inside of our order block here as well. And then that comes into, right, what time does it make sense to keep delivering higher? 10:10 into 10:30. As long as we don't keep breaking lows, right, we're respecting lows, it's perfect. Was able to enter myself within here, deliver higher, and we see on a lower time frame as well, inside of that 10, right, we have our order block that we respect inside of the 5-minute as well, after, right, breaking the high. Because if we would have respected price action, we wouldn't have formed another order block inside of here and then been able to enter with inside of here, reacting and respecting the order block, seeing the low time frame market maker model to these equal highs, and as well as the higher time frame, right, order block and lows that we've swept here into the order block like we talked about. We come onto a 5-minute, we come onto a 5-minute chart as well, take all of this away, and we see even after here, right, we break the high, and there's no real hourly displacement, right, but we see we keep respecting the lows, respecting the order blocks, and delivering higher. just a little bit sloppier of price action, but we still deliver almost to the draw on liquidity, SMTing this high once again. Or not once again, but SMTing this high here and seeing how we'll deliver lower if we need to deliver lower, or if we just need to deliver open low, high, and then, deliver past. Or if we respect the SMT inside of, the weekly SMT inside of rejecting this weekly fair value gap as well. But with the weekly right candle wicking and closing back inside, I would more anticipate it to continue rising higher, taking out this low resistance. And even if we do need to move lower, right, moving higher to then move lower, but just seeing how we react above this high into our order block here as well. But yeah, it's going to be pretty much it for the video, guys. If you guys enjoyed, be sure to like the video. I put a lot of work into these, and it takes, a good amount of hours, just filling up the notes and really just trying my best to get the information as correct and, get the charts as, visual as possible for you guys to be able to almost copy and paste every single one of your trades, because that's what I do, and you should be able to do it just as easily, because all my trades look the same, so yours should as well. They should be consistent, have rules, and obviously you should take them with discipline. I hope you guys have a great day. Be sure to like the video, subscribe, and be sure to check the comments in the description as well for a link to join the Discord community. You guys have a great one, and I'll see you in the next video. Peace out.